Hi, everyone. We want to talk housing, complex market where we've seen supply and demand, underinvestment in new construction for years coming out of the financial crisis, and home mortgage rates have been stubborn at around 7%. I'm joined by CJ Maloney, one of our mortgage experts. And CJ, I want to talk to you about the housing market and really prices, affordability, kind of a combination of rates and prices. Recent data from a couple of sources show home prices might be coming down a little bit. Is that the first step towards affordability?
Well, you always want to hope so. I mean, with the news, you always accentuate the negative and eliminate the positive. That's how you get clicks. But if you look at the FHFA home price index month over month, went negative for 2 months back in the summer of 2022, hasn't been negative since then, except for the most recent reports. The S&P home price indicator was negative from July 2022 through January 2023. Went positive again until the most recent report. So both indexes, remember, also increased all throughout 2023, despite mortgage rates hitting 8% in October of that year. So the recent overall trend in prices, while slowing, it's still showing positive year-over-year price growth. Consider that as of right now, existing home sales median price is down 6% from its peak seen last summer. Most of your home sales are existing home sales. They run between 5 to 7 times new home sales. So with the way the methodology is calculated, possibly by this summer, we could see home prices on a year-over-year basis go flat or even negative, and that will affect housing sentiment even more.
Yeah, good. Well, okay. So, I mean, look, home price declines if you're trying to buy a house are great. If you already own a house, probably not so much. But along those lines, CJ, inventories are up in the most recent reports as well. What can you tell us about what's going on there?
Well, inventory, of course, it's certainly going up year over year, but you have to look at, I compare inventory to 2019 prior to QE4. What QE4 did is it removed so much inventory from existing home sales because so many people are sitting on record low mortgage rates that they've taken a massive chunk of existing home inventory out of the market. New home inventory is fine. The existing home sales inventory, because of these record low mortgage rates people are sitting on, is not coming back anytime soon. And that will help keep a floor under home prices and possibly even keep home price appreciation positive going forward.
So it sounds like housing is going to continue to be a complex issue. It's not the biggest part of our economy, but an important part of our economy. Part of the key part of the American dream is owning a home. So we'll keep an eye on this. Thank you for joining. I know we'll have more to talk about in the future.